Hey guys, it's Will here. So I'm going to go through the markets and some ETFs and stocks you could take a look at. But what I usually start out with is going through the markets. So if you look at my videos in the past, I've been talking about this downtrend for quite some time. You can look at it at a weekly chart when you got this lower high right here, bounce off the 50-week average, moving average, and then a sort of another failure here. So now another lower high. If we go to the daily chart, we're down below the 50. We had this little rally here, but failed at the 200, and then we're down below the 50 again. And then once we broke up above the 50, we had support. There was a rally here. So if you're doing a daily chart, you can see down here with the momentum, you crossed here and you crossed there. So it's often a good time, especially if you're down lower. Or if you're near if you want to wait till you're at the zero line, which is usually above the 50-day moving average, you'll get a little run potentially to the next resistance, which is the 200 in this case, or some other point like here. So I've got these green volatility stops, and sometimes it pulls back and you get a little red. It depends on the sensitivity. Mine's fairly close. If you put it like 1.5 or whatever, you can sometimes still get a green dot, and that would keep you in. If you want to use the other like 21 exponential, sometimes you get that bounce off of there, or the 50. You basically had a bounce off the 50. But like this period of time here, we've had these red volatility stops cross down below the 8 EMA, and it's been in a downtrend. You can see the cross of the momentum here. So, we're in a downtrend. There's a doji right here at the 50, but so it could have bounced, but it kept going down. So that was a sign that it was going to continue to go down. That was a NASDAQ. S&P, all sort of similar. We had this run with support at the 50, hit the 200 and bounced down. Now we're in this downtrend. So all the markets are looking bad in this downtrend. So obviously you have to be careful. You could get a rally at some point. But it looked like it did fail at this 50-day. But whenever you get away from the cross and you have this period of time, there's a risk of reversals. But like if you see here, you had these little reversals here, pullbacks, but from the momentum you can see it never crossed, and the 9 exponential here is sloping downward this whole time. So you get these little waves, and that's where you have to be careful when you get in, and where your stops are. So with that in mind, and the VIX has been going up since this low here crossed over. So with that in mind, things are not looking great for most stocks and sectors. Friday there was a bounce in oil, gold, silver, natural gas, but there was a cross in the momentum there. The gold, it's still heading down. Momentum is heading down, and time will tell if that's a bounce, but it's a bit early to be doing that. So like it's fairly risky to get into most of the areas. So from there, when you have with TC2000, which is what I'm using, you can click on this component watch list and see all the stocks within that ETF, and then you can look at those individual stocks. If you want to get a free trial or $25 off your subscription, you can check out the link in the video description below. And I'm using the gold plan and real-time US data. I've got, it's based on what I need for my trading, and that's, all the alerts and the watch lists and stuff like that. So given that the markets are, you look at the overall markets and you see this, negative trend, barring any reversals, what I have is another watch list called Inverse ETFs. If you want to see all your watch list, there's ones built in: Canadian ETF, US stocks, ETFs. You can look at indices for the sector, the industry. there's a whole ton of specific sectors and things you could do. But I've got in the personal section the ones that I've created. So I've hand-picked ones because I want to filter out a lot of the extra stuff. So in the U.S. sectors, I have a list here that I've hand-picked that are, the ones that I like, because the overall sectors will have leveraged ones, will have really low volume ETFs. So over time, I add them to a list, and then I filter those myself. But you can also scan, the entire sector. But in the inverse ETFs, if you take a look at, let's say, the NASDAQ inverse, you'll notice that we had this downtrend. It broke the downtrend, green volatility stops. And if you want to be a little more careful, you wait for a pullback and then support. So because it's supported at the 200, that's a really strong support. And so that could have been your entry point with a stop, below the 200. And we're still continuing. If you're looking at the daily charts, I've also got these columns that show that's above the weekly and the daily. So this is a strong trend because now we're above the weekly trend as well, except that we haven't crossed on the momentum, but it's curling back up again. But so depending on your anxiousness to get into, the reversal, you haven't technically crossed. You are above zero and you're sloping up with the PPO, but with the MACD. So that's the inverse of the NASDAQ. Same thing with the S&P. We've had this uptrend right at, you can see how it's supported at the 200. So if you want to get into some inverse stuff, that's right now the best area to be in. There's also leveraged ones. Before I get into leveraged ones, there's ones for different markets. There's, obviously the dog is for the Dow Jones. It's all looking good from this crossover and this support. But then you can get into sector specific. There's a short of a financial. There's the if you want to short like the ARK. This one will go up and down a lot more than the markets, but you can see the trend. We have a really nice trend here. So like if you look at MACD during these little spikes where you have green volatility stops, if you look here, you almost never really crossed over, maybe a bit here. But the average, moving average is heading down. So not until you start sloping up. If you want to be more cautious, you want to see this upward 9 exponential moving average of the price percent oscillator is where good entry points are. In Canada, there's this cannabis inverse. The volume's not great. The other thing that you could look at is interest rates. So the 10-year or 20-year, there's an inverse TBF, and it's basically going up if interest rates go up. And so we had this recent high here, which we're getting close to, which it could fail at that point. But you can see how it's crossed back here, so you'd want to get in earlier. But, we are heading up, and that means that interest rates could be heading up, higher than... So when you start getting, over 3 and starting to get higher and hitting, especially if we break this recent high, that will be bad in terms of the stock market. So TBF is another one you can get into. If you go to the watch list, I've got a personal one called Leveraged ETFs, and I've sort of handpicked a bunch. This is obviously higher risk, but I got to just open up this window a bit so you can see. But basically, there's 2 or 3x in some of these. Ultra Pro, that's the NASDAQ, SQQQ. There's oil and gas. These have a lot of sectors in here. Brazil Bull, 2x. You got semiconductors, 3x. Some tech stuff, you got Asian stocks, 3x. So these are 2 or 3x You got Gold Nugget and JNUG is the junior one. So you can, Nail's a home builder one. You can make a lot of money or lose a lot of money with these ones, but you've got a lot of narrow focused ETFs that are inverse or bear. They call them bear ETFs or inverse ETFs. Cloud stuff. So you can see that the tech is going to be, inverse tech is going to be going up. There's LabD, which is a bear. Real estate, DRV. You can see there's been a run here. So that's, if you're looking at probabilities, nothing's for sure, but right now the probability is in a downward direction. So the inverse, instead of trying to find certain nuggets within this downtrend, the inverse are, higher probability right now. But then you get to a point where, with the markets, if you look at the stochastics or the oversold kind of thing, you're down in this oversold area now. It can stay there for a while. You see how this thing kept going down within this oversold. You can't just look at the stochastics or the RSI in isolation. But, the other thing is these bottoms here were quite a bit further down in the PPO section. So this is the low here, and it didn't get too far down. It was 2.3. And then this low hit 3.92 on the price percent oscillator. This low was actually not as low as the previous one, even though it went further down. So it's a very up and down market right now. You don't always get long periods of like a trending market. It's a lot of ups and downs. So the risk is pretty high right now. The probabilities, can be against you with the ups and downs. So, you got to be careful right now. And in September, there's going to be some inflation numbers coming out and a Powell, like a Fed interest rate hike as well. So September can be not a great month historically as well. So, right now, if you just want to look at the charts themselves, you're in the downward direction. And that is confirmed with the weekly chart having a red volatility stop and you sort of pulling down. And it's curling back down again. So the odds are that things will continue in a downward direction. But there will be lots of volatility. And it's going to be a little bit challenging in this environment for trading. So if you want to get TC2000, check out the link in the description below. It's a product I'm using for my charting, and talk to you guys in the next video.